Zaheer Anwari on behalf of the Dynamic Trader. How you all doing? I think we had some tech issues this morning, so I think they've been resolved. But can I just get a quick thumbs up that you can hear me and you can see me okay? Yeah, sounds clear, and you can see my charts as well. Yes, okay, fantastic. Excuse me. Okay, so before I actually get into the charts, I'm just going to refer you guys to a few web pages. So as a lot of you guys know, I'm a long-term trend trader. I've been trading since 2007, and I look for long-term opportunities in the market. And it's something I really encourage private traders to go down. That's the route that is most beneficial for us. I know day trading tends to be the approach that most go down, but the success rate of day trading is very low, and that's because day trading comes with a lot of challenges, i.e., it's inconsistent, it's time consuming, it's stressful, and the real sort of idea behind day trading is to make quick money. And unless you have a large amount of money to start off with in the first place, you're going to find it very difficult to see consistency through day trading. And you're actually sacrificing time for money. It's effectively becoming a 9 to 5 job. You're glued to the screen. You want to look away from that. You want to have a much bigger approach, looking at the larger time frame. So I'm going to show you how I look at the monthly, weekly, and daily time frame to look for long-term trends. A lot of benefits that come with this. It's less time in front of the screen. It's more profit. The profits are consistent. They're larger. You incorporate compounding. It can be easily adapted around your lifestyle. So most people have a job, family, businesses, careers, hobbies, etc. You have a lifestyle. Trading you don't want trading to be something that becomes a hindrance to your lifestyle. You want a style of trading that can be adapted around what you do in minutes a day and not compromise on profit. And so this is something that I very much promote. In addition to that, expand your watch list. Expand your watch list. Don't just focus on foreign exchange. Look at stocks, look at commodities, and you'll find that by expanding your horizons, you'll have far better opportunities. Foreign exchange at the moment is very difficult to trade. It's whipsaw, it's range bound, it's choppy. You're in profit and then suddenly it reverses against you. It's just not an environment that you want to be in. You want to be in nice, steady environments where profits grow consistently week in, week out, not necessarily day in, day out. There'll be periods where the market goes against you, but you have to learn to hold during those periods, wait for the correction, and then the market to move back in your favor. This is all part and parcel of trading. Growing to the trader that you want to be, understanding the skill set and the mindset of what it takes to be a trader. The psychology of trading shouldn't be your emphasis. It should be understanding how price moves, understanding how to read price action. That should be your emphasis. And then from there, the psychology of trading comes in, and it's from there that your mindset develops. So don't think that if you can't trade or if your trading is not consistent, don't blame your psychology. It's not. Your system doesn't work. Your strategy doesn't work. If you've got a strategy that doesn't work, it doesn't matter how much psychology you read about. It's not going to fix a dud strategy. Think of it like a car. If a car's got a dodgy clutch or a broken clutch, it doesn't matter how much mind preparation you do. It doesn't matter whether you're male or female, your age. It doesn't matter. If the clutch is broken in the car's not moving. You have to go get the clutch fixed. It's only once the clutch is fixed that you can then start moving that car. And how well you drive that car is very much dependent on your age, your ability to drive, whatever that the case may be. So look at trading in the same way. All right. So before we get into the charts, I'll just direct you to some seminars that I'm conducting. So on the 15th of May, I'll be doing a live training day. It's from 10 a.m. to 4 p.m. This live training day comes with 3 months of support. So it's not just a one-off day and then you're off out into the big bad world. It comes with 3 months of support. Now it's £99 per month, but it's 3 months upfront. So £297 for 3 months. But there is a 30-day money-back guarantee. So if you're not happy within the first 30 days, you'll get a full refund on that. Okay. So that is on the 15th of May. That's here in London. If you're abroad, which many people are, then we have the online version. So just sign on here. The online version is all done via video recording. There are some webinars in there as well. Okay, so the website here is zaheer.live/seminar. That's the live version. Zaheer.live/apprentice. I've also got another video page which has some videos about me. People often want to know about my journey and how I got into trading. So this is zaheer.live/membership, and there's some videos on here as well that you can register for. These are techniques that I actually use. So these videos will actually break down some of the techniques that I use. There's a couple of videos on here. So have a look through these. It's just zaheer.live as my starter, and then a seminar, Zaheer.live apprentice, and Zaheer.live membership. Okay, and I've got a few other web pages which I will direct you to later on. Okay, now let's get to the charts. Let's do a bit of analysis. Okay, can I just get a thumbs up that you can see my charts there, please? Administrator. And if anyone can out there, yeah, okay, brilliant. And if there are people in the chat box and the chat room, if you want to say hello to me, let me know you're out there. And if you have any questions, I know there's some people who are watching through YouTube. Hi, Cass. Thanks very much. I know there's people out there watching through YouTube as well. So, you know, if you do have any questions, please send them to the administrator, and administrator will then send that over to me. Okay. Let me just simplify this for now. Okay, so if you have a look at the chart, this is a typical chart setup of mine. So on the left hand side, we have the watch list. We have the foreign exchange watch list here. Now notice it's an extensive watch list. I'm not looking at just one or two currencies, which is a typical approach for most traders. You know, they may only just trade euro dollar. I went to a meetup on Tuesday evening, and this meetup was for a group of traders in London, and I thought I'd go check it out. And it was a meetup for people that just day trade gold. It's one way. It's not the best way. It's just a very difficult way of trading. The point is they have a very small watch list, a single entity gold. What you want to do is have a big watch list. So you notice I've got everything here, all currencies, and in addition to that, I look at stocks. I look at commodities. I look at the indices. I don't trade the indices, but I look at the indices as a guideline to what the stock market is doing. And even stocks, I look at UK stocks and US stocks. You want to have a big portfolio. And what you then want to do is move to where the money is. So when foreign exchange is flat, which it pretty much is at the moment, then where is the money? Well, it may have moved to stocks. It may have moved to commodities. Ultimately, what we want to be able to do as private traders is to identify where the money is. And when I say that, I mean, where are the market makers? Where are the institutions? Where's the liquidity? The liquidity isn't always in foreign exchange. The institutions will dump money in foreign exchange for a while, then they'll take it out. Then they'll go put money in stocks, and then they'll take it out. And when they put money in these markets, they'll provide liquidity for months. It's not just in and out. So you want to be able to identify where the money is, go to that market, make your profit, and then leave. When they move to another market, follow them. We don't want to trade exactly like them, but we want to understand where they are to be able to take advantage of the market. This is crucial. This is the foundation of trading. If you cannot identify where the money is, then you'll always be struggling. You'll always be chasing money. You'll always be risking large or small moves because the moves are whipsawed against you and you're trying to get in and out quickly with profit. And as we know, this can lead to dangerous territory such as losses, stress, blown accounts, and it's not a style that you want to adopt. So have a big watch list, move to where the money is. In addition to that, look at the time frames monthly with my key levels of support and resistance on the monthly time frame, weekly and daily at the bottom. So monthly tells me overall market conditions, tells me where the key levels of support and resistance are. Monthly helps me to identify whether the market is in a trend, whether it's in a consolidation, and it also helps me to work out my risk to reward, because wherever I enter, I can then basically figure out my reward based on the next support or resistance level. So that's where the monthly time frame comes in. Weekly and daily is where I look for trend, direction, and alignment. So a simple way to look at this is if the weekly is big brother and daily is little brother, whatever weekly is doing, I want daily to be following. So if I open up the weekly time frame, I have the 200 moving average, and I have a proprietary trend filter that gives me areas of bearish trend where it's red, bullish trend where it's green, and then black, which is where it's a neutral environment. And I have the same logic on the daily time frame. So I have the 200 SMA and I have the trend filter. So if price is trading below the 200 SMA, I want the trend filter to be red. And if price is trading above the 200 SMA, I want the trend filter to be green. And so I want alignment between the weekly and the daily time frame. I want both time frames to be above the 200 and the trend filter to be green, or below the 200 and the trend filter to be red. If there's any other combination, I stand aside. So let's start with the Aussie dollar, US dollar. We can see this is a trend. And remember, this is a monthly time frame, guys. So if we look here, this is a long-term trend. And you can see for several months, little periods of consolidation. This is all part and parcel of a trend. I mean, if you look at this trend here, it's got a bullish direction to it. But look, there's little pullbacks. Then we went through consolidation, this little sideways movement. It's not little. If you look at the bottom, it's gone on for quite a long time. Sideways movement. And then we've had a trend to the upside. Then we had this crash of 2008. Then we had another trend. Then we had this consolidation period. Then we had a bearish trend. Now, price is just going sideways with the round number 0.70 acting as a support level. Excuse me, guys. Sorry, I've got a bit of a sore throat, so apologies. Now, if the market is going sideways, the smart option really is to stand aside. You don't really want to get caught up in these consolidating periods. This is a consolidation. It's very, very difficult to trade. If you look at this consolidation, it dates back to 2015. It's just going sideways. Now, if I bring up a stock that I've traded in that same time, this is Nvidia. Nvidia was the top performing stock for me, US stock for me in 2016. Okay, so in the time that the Aussie dollar has gone sideways, Nvidia has gone through the roof. I entered Nvidia above $40. This is going back to, I think it was April or May of last year. And you can see how it's just gone through, peaked at $120. It's now finding support at $100. And I held my positions all the way through this bull run. So that was the best performing US stock for me. Best performing UK stock, a company called Boohoo, which you may be familiar with. It's an online clothing company, retailer. Just stock's gone through the roof. So when you have 2 or 3 of these good trends a year and you're able to hold and compound into these positions, the profits that you'll make will far outweigh any profit that a range-bound market, which FX is at the moment, will give you. You'll always struggle. It doesn't matter which currency we look at. The currency market in general is going sideways. Here's the euro dollar. It's range-bound. The last time I traded the euro dollar was this bearish trend here. From 1.4, which is a round number, all the way down to 1.1. That's a 3,000 pip move. I extracted just under 16,000 pips on this move through compounding, 5 positions. I held these positions for 8 or 9 months, and this returned me profits of in excess of 55% on my account, a single trend. Since then, I've taken my profit, and the market's been sideways. What I'm now looking for is a breakout to the downside. Now, ideally, the breakout will be to the downside. It could, of course, be to the upside, but ideally, we want to break out to the downside. Why? Because the trend is already down. It's just going through a consolidation. After every move, the market consolidates. That's a natural feature of the market. So you take your profit in the trend, you exit during consolidation, you stand aside during consolidation, and you trade something which is already in trend, i.e. Nvidia or another currency. And then you wait for a breakout. Now, ideally, we want to break out to the downside, and you can see why. Plenty of clear space that price could then move towards. If it goes to the upside, we've got resistance, 1.2 resistance. Once it clears 1.2, then we've got room towards 1.4. So price first needs to move to 1.2, then needs to clear 1.2, and then we can start targeting 1.2 to 1.4 because we've got nice clear space. However, the move to the downside is much quicker. break out to the downside much quicker, and we could then start entering trades and potentially seeing profit quicker rather than waiting for a reversal to the upside. Okay, so the euro dollar very much in consolidation. If we look at, I'm just going to pick random currencies, pound dollar. Again, you can see that here is a bearish trend, 1.7 to 1.2. That's a 5,000 pip drop over since 2014, and there have been very profitable periods in this time. I went short here, I went short here. At the moment, it's just going sideways. Now, if you go to the weekly, it's below the weekly 200. The trend filter is now green. If you go to the daily, above the daily 200, the trend filter is now green. So this is now starting to look interesting on the daily time frame. It's above the daily 200, trend filter is green, but it's below the weekly 200 and the trend filter is green. Now, having said that, we've got 2,000 pips between where price is now and the weekly 200. That's a significant distance. So if you do get opportunities to enter long positions, then you would want to reduce your risk because you don't have the full criteria. The full criteria for me is for price to be above the weekly 200 and above the daily 200, and the trend filter to be green on both time frames. And if I do have that, then I'll allocate a full 2% risk. If my checklist isn't completely met, then I would still place trades potentially, but I would reduce my risk. Now, at the earliest, I want to see 1.3 cleared. You can see it's acting as a resistance level. I want to see 1.3 cleared before I start looking for any long opportunities. All right, so still there is a little bit of patience. However, overall, looking at the bigger picture, we can see it's been consolidating for a long period of time. So you do want to be very selective with how you enter into these trades when particularly when reversals are coming in. So we can see that potentially we may be seeing a reversal in trend. This is not a guarantee. This could simply be a pullback before further weakness, because we've seen it here, we've seen it here, we could see it here. 1.3 could hold as a resistance, and we could then see further weakness to the downside. So it's too early to decide which direction you want to go in. Let the market dictate the direction, then go in it. Don't try and guess it, because more often than not, you'll be wrong. And if you're wrong, that's unnecessary losses. And that's how people blow accounts, because if you're wrong, a lot of traders don't have stop losses. If you don't have a stop loss, that's a blown account. The key to good trading, guys, first of all, as already mentioned, is identifying the money. Then allowing a trend to develop. You don't want to pick tops and bottoms. Warren Buffett doesn't pick tops and bottoms. He said it himself. It's impossible to pick tops and bottoms. What you want to do is allow the market to dictate the direction. So let a trend start and then go in that direction. So if you actually look at the daily, if we look here, the trend is actually in progress. From this point here, we can see there's a trend in progress. We've got a high, we've got another high, we've got another high. So price is creating higher highs, but it's still within this area of consolidation, and 1.3 round number is acting as resistance. So price could come back down, or if it clears 1.3, then it may move towards 1.4 and 1.5. Round numbers being psychological levels that price likes to move towards. Think about it, guys. When we're jogging, very rarely will we just stop at a random level like 11.2. If we get past the 11 kilometers, we want to get to 12 kilometers, 13 kilometers, 14, 15. It's the same thing with price. Price likes to target round numbers, 1.3 to 1.4, 1.4 to 1.5. If you look at the monthly time frame, you can see for yourself, high point, 2.1, round number. This resistance here, figure 2, round number. These two resistance levels here, 1.7, round number. These two levels here, 1.5, round number. These two levels here, 1.4, round number. Remember, round numbers are zonal areas. They're not hard levels. So don't expect price to come to these round numbers pit perfect. That's why we have resistance levels that are around round numbers, not bang on round numbers. This is an art. It's not a science. Okay, but the point is that by understanding round numbers, that will then allow you to work on your risk to reward. Most people have fixed risk to rewards, 1 to 1, 1 to 2. It's not good trading. You're taking profit too early. Remember the expression, the trend is your friend until the bend at the end. Look at this trend here. This crash of 2008, for example. I'm just using it just for visual purposes. Look at how quickly it moved, and look at where it moved from, 2.1 to 1.4. These aren't random levels, these are round numbers. So if we went short below 2, I would then hold my position to 1.9, then hold it to 1.8, then hold it to 1.7, 1.6, 1.5, 1.4, and I'd be following with the trailing stop loss, which would eventually get stopped out somewhere around this level here. So if you look at what I didn't predict the top. I allowed a trend to establish itself. I entered below 2. I held my positions. Now, at the end of the trend, you will always give back profit because, again, to create further profit, you always have to have some risk on the table. So I have my trailing stop losses that are following price that will always leave a little bit on the table. Eventually, the trend will reverse, hit my trailing stop loss, and I've made significant profit in the middle of the trend. It's simple. It's powerful. The growth is exponential. It's less time involved. Just requires good planning, good software, which I usually do at the weekend, good understanding of price action, and then the markets pay out and the profit is very, very simple and easy to accumulate. Okay, so let's have a look at another currency, New Zealand dollar. Again, trend, pullback, and now it's stuck in this consolidation around 0.7, round number. It's acting as a support zone. We need to see a breakout to the downside, and if price does break out, then we could see price move towards this support level. If it clears that, then 0.5. So New Zealand dollar currencies are looking quite interesting. We can see it's below the weekly 200. Trend filter is red, and it's below the daily 200. Trend filter is red. If price breaks below this, breaks and closes, let me just get my support tool. Right, you can see that price is trying to break through this, tried once, bounced. We've got this engulfing candle, further weakness. What we're now looking for is a break and a close below this pivot. If we get a break and a close below this pivot, then potentially we may see further weakness, and we'll then have alignment between the weekly and the daily time frame, and you could then look for shorting opportunities. So New Zealand dollar, US dollar is one that I'm looking for potentially to place a trade. Now notice again, allow a trend to establish itself. Here is a trend, here is a consolidation. If we take the start of the current leg, which is here, we could see another move down, pullback based on this support. Next breakdown, that's your entry into the market. Now in hindsight, yes, I'd like to get in here. In hindsight, I'd like to get in here. But trading is not about hindsight. It's about capturing these trends, these moments in time as they appear. You don't want to look back and say, right, I should have got in there. It's too late. Okay, you want to be able to capture these trends as they appear. That's why you want to use the larger time frames. It removes all the intraday noise. It gives you a very clear picture of what price is doing, very clear idea of support and resistance levels. What you then need to do is understand how to enter, how to exit, how to manage your risk, how to compound. This all takes training. All too often, where a lot of private traders go wrong is that people think this is easy. You're fed a lie. You're fed a load of nonsense to think this is easy. All you need is MT4, a bit of software, go onto free webinars, join a free forum, share some ideas off each other, and hey presto, you're going to be a consistent trader. It's nonsense. This is a business. You need a good foundation to your business, i.e. solid training from someone who knows what they're doing. You want software tools. And I don't mean a robot. And I'm not talking about one of those robots which trades for you, another fantasy in the trading world, where you pay for a robot and the robot will make you a millionaire while you sit on the beach looking at the sunset. Absolute nonsense. Signal services, where you're fed entry points into the market for $50 a month. Again, nonsense. I mean, an entry into the market is simple. Breakout, pullbacks, bounce of moving averages. There's a whole manner of ways of entering into the market. The real skill to trading is the exit management. How are you going to exit from the trade? How long could the trend go on for? How long could you stay in that trend for? How are you going to compound? Where could the trend come to an end? All of these need to be understood before you execute a trade. Paying for signal services are curve fitted. So signal services are back tested, curve fitted to produce a high percentage winning rate. And remember, winning rate is not the same as profit. A winning rate, a system has a 92% winning rate is not the same as a system that has 92% profit. A system that has 92% winning rate has 92% winners, but one winner can blow a trading account if you have no, one losing trade can blow a trading account if you don't have good risk management. Whereas a trader who can focus on making 92% profit consistently year in, year out, he's not worried about winners and losers. He may have a 50% losing rate, 25% winning rate, 25% even rate, break even rate. But the 25% winners are so large that they cover losses. The key to good trading is cutting your losers short, letting your winning trades run. So a good trader focuses on a few large winning trades as opposed to many winning trades. Many winning trades work if you have the funds of a bank, billions to play with, in out, in out, in out, high frequency trading. It works. We're private traders. Even with my account sizes, I've got 11 different account sizes, accounts that I've grown over the last 10 years. I've got significant sums in all of my trading accounts, but that still doesn't compare to what a bank has. And so I would still not adopt the approach of a bank, given the returns that I'm making by adopting this approach, which is the most appropriate approach for us as private traders. Okay, so be patient. Allow the right environments to appear and then execute the right strategy for the right market conditions. New Zealand dollar, US dollar, wait for a break below support, then you can start looking to execute trades. Generally, what happens is that if the New Zealand dollar currency is in trend, then depending on the New Zealand dollar, US dollar is in trend, then what you then need to do is look at which other currency out of the New Zealand dollar, US dollar, which one is the one that's causing the trend? Is it strength or weakness in the New Zealand dollar, or is it strength and weakness in the dollar? By identifying that, you can then go to the group. So the New Zealand dollar CAD is still very much in consolidation, not much going on. You can see it's just going sideways. If you go to New Zealand dollar, Japanese yen, sorry, New Zealand Swiss franc. Okay, if you look at New Zealand dollar, Swiss franc, this is starting to look interesting. Trend, consolidation, trend, pullback. Now we may see a breakout. Now, guys, look at things to note. By understanding pullbacks and understanding where pullbacks can take place to, will help you stay in trends longer. If I was short on this, let's say I went short based on my logic at this point here. Price moved in my favor. Then it started pulling back. Most people would panic on the pullback because their profits will start diminishing. But by being patient, allowing the pullback to happen. Now look at where the pullback took place to. This level, which is a previous support, which is now acting as resistance. Price pulled back to that level, indecision candle, bounce to the downside, breaking a close below this support, and I could then compound into my position, which has been running from here. I'm not in this, I'm just giving this as an example. But this is now looking interesting. A break and a close below this support will be a potential entry because we've started to have alignment. If you look at the monthly, plenty of space to the downside. Look at the weekly, below the weekly 200, trend filter is red. If you look at the daily, below the daily 200, trend filter is red. Now we just need that entry point. And the entry point is when price breaks and closes below this pivot support. So something to be aware of. Keep an eye out on end of day prices, do your analysis regularly, and take advantage of what the market may be offering you in terms of the overall trend. Let's have a look at the yen currencies. Yen's starting to look interesting again. Really, I mean, the monthly is stuck in this area. We had a bull trend, then we had this correction. Again, look at where it corrected to $100, 100 mark. Moved to the upside, and now we're just stuck in this area of consolidation. Weekly, interesting move. Above the weekly 200, came to that 110 support zone, and we can see how the round number is acting as support, and we're seeing a bounce to the upside, but the trend filter is still black. And if you go to the daily, above the daily 200, trend filter is green. So this is maybe one to keep an eye out on, but again, be aware of where the resistance levels are going ahead. I mean, if you look at the daily time frame, we've got this whole zonal area here, which will act as resistance. Then we got the resistance high, which is around 120. So you just want to be very selective with if you do have opportunities appearing, these yen currencies tend to move in correlation with each other. So here's the pound yen. This pound yen looks far more interesting. Why? If we start with the monthly time frame, here is a trend. Here is a consolidation. It's faced with 150. If it clears 150, which is a major level, then we could see moves to the upside. If we look at the weekly, below the weekly 200, but the trend filter is green. And if we go to the daily, above the daily 200, trend filter is green. So this is now looking interesting. The only downside is that it's below the weekly 200 when I want it to be above the weekly 200. So if it does clear this high point, which is what I'm waiting for, a break and a close above this high. If it clears this high and the 150 level, then we may see price move towards 160 and the weekly 200, which is a good, what's that, 1500 pips away. Then I may look to allocate a trade, but at reduced risk. Okay, Euro Japanese yen, another one. If we have a look, price is currently faced with this resistance level here. If it clears this resistance level, then we could see price attack this clear space ahead. If we look at the weekly, trend filter has now turned green, but it's below the weekly 200. So you can see how the yen currencies all have very similar setups. And if we look at the daily, above the daily 200, trend filter is green. So the euro now, after it was taking a bit of a tanking, is now gaining a bit of strength. And this is exactly what I mean by the whole sort of whipsaw nature of trading at the moment, of currency trading. It's all very choppy, bullish, bearish, bullish, bearish. There's no clear trend direction to it, which is why I'm not in foreign exchange at the moment, and which is why I'm standing aside, and which is why instead I have multiple positions running on stocks. So a stock that is performing very well for me is AMAT, Applied Materials. I've been long on this since $30. This is now at $40. Above $40, I'd like to see it move towards $50 and then $60. Again, the logic of round numbers hasn't changed. Even with stocks, I look at round numbers. If you look at the weekly time frame, above the weekly 200, trend filter is green. Above the daily 200, trend filter is green. Now, if you look at the weekly, the trend filter is predominantly green. Since it broke above $30, this area here, apart from this little bit here, it's been predominantly green. So as long as the trend filter remains green, I'm not too worried about the trend filter changing to black or red on the daily. And that's because there's just a lot more candlesticks, there's a lot more noise. So there will be periods where the trend filter turns red. But again, I'm not too quick to exit. Why? Because I look at price in relation to key levels of support and resistance. And this is a good example of how price came to a support zone, found support, gap up, and now we've seen a continuation of the trend. I've been in this trade since August of last year. So this is a gap up above $30. Now look at what happened. When price gapped up, the first thing I had to do was endure this period of consolidation. And this consolidation was a good 2 months. Once I'd gone through this period of consolidation, we then had a breakout and then this pullback. Look at this pullback. Where did this pullback come to? A retest of this support level, which was a resistance level. We then had an inside bar set up. An inside bar is where the next bar is completely inside the previous bar. This is known as an inside bar. An inside bar at support or resistance is a very good entry point. And you can see right here, this has moved on to hand out very, very good profit. So by being patient and allowing price the space to move and breathe, it's now gone on to return good profit. Okay, another stock that I'm in is LRCX, Lamb Research Corporation. Again, very similar setup. If we look at the monthly, I entered this above $100. This is now at $150. So I've been in it during this trend. If we go to the weekly, above the weekly 200, and the trend filter is green. Now, if we go to the daily, again, same setup. What did price do? Price broke above $100, came back to retest $100. It's a very natural feature to price. Break, retest, inside bar. An inside bar at $100 support. Price has gone on to return very, very, very good profit. So another good stock of mine is LRCX, a UK stock. is JD Sports. You can see that this has gone on to hand out a very, very good profit. I was in this in 2015, 2016. Then I was stopped out around this level here. And then once price broke above £3, that's when I got back in again, and I'm now back in profit. And you can see that this is now moving towards £5. We look at the weekly. Above the weekly 200, trend filter is green. So it was around this area here at the end of last year where I entered into this. And then if we go to the daily, above the daily 200, and we can see that this is now handing out profit. Going through a bit of a consolidation here, a break and a close above this high, and I'll look to start adding further positions. I don't have just one position, I have multiple positions running along this trend, all handing out significant amounts of profits. I've now got these all locked in with trailing stop losses. Okay. I think that's everything for today. Are there any questions, administrators? Are there any questions that have come through? Has anyone actually been watching? Because there doesn't seem to be any interaction on the chat box. No questions. If there aren't any questions, then I will end the webinar here. Okay. Let me just go back to my social media stuff just to remind you guys what is on offer if you want to move forward. So just one thing to note, if you want to email me, just put it in the chat box, Zaheer@ZaheerAnwari.com, Zaheer@ZaheerAnwari.com. I forgot to mention, guys, also, if you are here in the UK, if you go to my meetup page here, meetup.com/the dynamic trader -- in the title there, and if you click on this, I have a free meetup that I'm also doing on May the 10th from 7 p.m. to 9 p.m. So if you're here in the UK, this only went up yesterday, so there's a few people registered to it already. There's normally about 15 to 20 people turn up to each of these meetups, so it's a good opportunity. It's totally free. I'll be showing you a little more of the techniques and the analysis, and then a little bit more about the community and how you can move forward. Okay, so this is free. So if you're here in the UK, please register to that. As already mentioned, if you want paid training, £297 is the entry level course, 30-day money back guarantee on that. Please look at this page, which is zaheer.live/seminar. Online, zaheer.live/apprentice. If you want to watch more videos about me, zaheer.live/membership. Okay, I'm also on LinkedIn, so please search for me. I do a lot of updates on LinkedIn, so if I go to see all activity, you can see all the posts and analysis that I put up. So I'm quite active on LinkedIn. I have my Medium blog, medium.com/@ZaheerAnwari, always updating that. ALL is a stock that I'm in. I just wrote about that yesterday. So if I just bring up ALL, US stock, you can see now that this is trending quite well. I'd like to see this move towards 100. Crucially, above the weekly 200, trend filter is green, but on the daily, we had earnings release and a gap up yesterday. I've been in this since end of February. So since around this point here, I've been in it, and you can see how I've been in profit, negative, profit, negative. It's just been very sideways. Now we've had a breakout. A breakout is usually a very strong sign of a trend continuation. So if we go to NVIDIA, which is what I mentioned earlier, it's a break and close above $40. See this gap up of $40, and we can see that how price then just went through the roof after that gap above $40. Okay, so I'm looking for ALL to do exactly the same. Okay, we've got to break up. I'm now looking for this to move all the way to 100 and ideally clear 100 and move towards 150 and 200. Those are the levels that I like to see stocks move towards. So yeah, all of that explained on my blog. Usually update it once a day or every other day, and I talk about different tips and techniques and stocks that I'm in and positions that I've taken. There's a podcast here that I was interviewed on, so please have a listen to that podcast. Yeah, I personally think it's the best trading blog you will find on the internet. So yeah, please have a look at that. And yeah, let me know your thoughts. Email me, Zaheer at zaheeranwari.com. Okay, I think that's everything. Can you review euro dollar? Yeah, I think I already went through the euro dollar. Did I not? Have a quick look at that. So the euro dollar for me, in simple terms, the euro dollar is just in a consolidation. It's not a very attractive looking chart. It's one that you just want to stand aside on. So I've already talked about the euro dollar. I won't go into too much detail. There's your trend, and there's your consolidation. So it's a sideways market. It's not a market you want to trade until it breaks out. When it breaks the low of this consolidation, that's when I'm looking to enter short positions. I did enter a short position off the 200 SMA based on a pullback. Now, the 200 SMA, a pullback to the 200 SMA can often offer a good opportunity. I wouldn't recommend it if you're inexperienced with trading, if you're still sort of getting new to trading or still looking to understand how to trade. In simple terms, during consolidations, stand aside. With experience, you will understand that sometimes you can find good entry points, i.e. a bounce off a 200 SMA. So if you look here, pull back to a 200 SMA, inside bar, and then it moved into trend. However, we then had this correction and then move out, and I'm still in this because my stop loss is above 1.1, and you can see that 1.1 is acting as a resistance level. So my stop loss is above 1.1. I'm in a little bit of a loss. So I've gone in from small profit into a tiny loss. If it reverses and hit my stop loss, I'm going to lose. I think I've got a 0.5% risk on here, which is nothing. You know, to make money, you've got to have risk on the table, but your risk shouldn't be large. It should be small and insignificant. But the returns, the upside, should be big. And by compounding, your 0.5% will then go on to return you 5%, 6%, 10%. And by compounding, that 10% will just keep on growing. It's not uncommon to see 20% plus off a single trend. So trends like Nvidia, as already mentioned, this trend has returned me in excess of 20%, far more than 20% on my account. And I've got multiple stocks running. So if you understand how to do this, day trading it's unnecessary. It's unnecessary, guys. You want to be smarter. Smarter with your time, smarter with your money. Day trading, you're playing into the hands of the broker. You're sacrificing your time. You're getting stressed out. You're seeing inconsistent returns. If you are seeing returns, they're capped because it's day trading. You're capping your profit. So why cap your profit? The whole point of trading is to make money, is to make profit. And you don't have to be greedy about it. You're just letting your winning positions run. That's not greed. By having a profit, you're setting it. There's two things to take profit levels. First of all, there's fear involved, because what you're saying is that I'll take my money at this level. Then the second point is that you're almost saying that you can read the market. What you're saying is that the market's not going to go any further, so you're happy to take your profit at this level. It's incorrect. You can see here that if I took profit at $45, let's say I entered at $40 and I took profit at $45, this has gone all the way to $120. Why would I be happy with profit at $45 when this has gone all the way through to $120? How have people like Warren Buffett made their wealth? It's not through day trading and holding position and taking quick money. It's through holding positions and compounding. Warren Buffett, Richard Dennis, who trained the turtle traders, Jesse Livermore, Reminiscence of a Stock Operator, read that book. Way of the Turtle by Curtis Faith, John W. Henry, gentleman who owns Liverpool Football Club and I believe it's Boston Red Sox in America. He's a trader. All of these guys have generated wealth through holding and compounding. Private traders today have been totally blinded by the internet, by quick riches, by brokers promising you money on a lower time frame. All you need to do is sit in front of your screen and make 10 pips a day. So you're wasting your own time. Time is valuable. You need to appreciate what you can achieve as an individual far more than what brokers are telling you. You guys have infinite potential. You're just allowing brokers to cap that potential by telling you to trade on lower time frames. It's not the way to do it. And secondly, time. Time is our most important commodity. If you're sacrificing time for money, what's the point? What you want to be able to do is empower yourself. You want to have the time to spend the vast sums of money that you'll make through trading. Long-term trading is the way forward. Okay. George Rang, when is the next webinar? I just came in while it was ending. I do these webinars, Will, on a weekly basis. So yeah, the webinar will be this same time next week. Alexandru, the blog looks interesting. I'll check it out. Yeah, definitely. Please check it out, and contact me. As I said, I've put the email out there. Send me your thoughts. Let me, engage me in conversation. If you're interested in training, join the apprentice community. It's an inexpensive start, guys. It's £297 for 3 months. You've got plenty of time to understand whether you're trading the right way and whether this is the right way for you. If you can't invest £297 into yourselves, then you're not going to see the consistency that you want. And I'll make something very clear here. I don't make any money from this £297 course. It's £99 a month. We've got overheads to cover. We've got software licenses to cover. There's no money for me in this. What this is a way for me to connect with serious people, get them on the right path to trading. Because a lot of you guys are not going down the route you should be. Hence why you're on this webinar right now. If you're true to yourself, what you're looking for is more consistency, more profit. That's why you're here. And you go to these free webinars because what you're looking for are those little nuggets of information. So you come to my webinar, you'll take something. You'll then go to another guy and you'll take something. You'll then go to another guy and you'll take something. And then what you're trying to do is find all these little nuggets of information and try and figure out how to trade on all these free bits of information and then free software such as MetaTrader. And it just doesn't work. What you want to do is treat it as a business. You want to be a private trader. You must learn from someone who's a private trader. There's no point going to someone who's ex-institutional, ex-Goldman Sachs, ex-this, ex-that, now teaching private traders how to trade. That's not an institutional trader cannot teach a private trader the techniques that are relevant to a private trader. An institutional trader has traded with billions, millions, and has often had to use fundamentals to make their trading decisions. Look at what we focused on today. Long-term trends using technicals. It's a different approach. Okay, so hopefully hear from all of you at some point, at least the serious ones anyway. And yeah, looking forward to taking things forward from there. All right, all. Enjoy the rest of your week and see you all on the next webinar. Administrator, thank you. Take care. See you later. Bye-bye.